guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 futures chart. S&P currently trading at 3,890. It's been a highly volatile trading session. That's why I've posted the videos today slightly later than when I usually do. It's because I kind of wanted the dust to settle with regards to Silicon Valley Bank. Now, of course, the finance stocks have been all over the place. We had First Republic Bank down 65% in pre-market trading, along with many other banks which I've never really heard of, to be honest with you. As of course, as many of you are aware, in the US you do have over 5,000 banks, and most of these banks are regional banks. So massive cracks in the finance sector over in the US, and this is a result of the Fed's aggressive interest rate hikes. But what's very interesting to me is that we now have the bond yields plunging. We have the 2-year now trading at 4.2. This just a few days ago was trading above 5. We have the Fed's fund rate, which is currently at 4.1. So this now indicates that come January 2024, the market is now pricing in rate cuts. Now, if you'd have asked many analysts this time last week, will there be a rate cut this year? Many of them would have told you that you're foolish and would have shown you out the front door. Where now, those who are arguing that there is going to be a rate cut this year don't look so foolish. So with that being the case, one has to kind of take a step back and, look at the markets and think, well, hang on a minute. On the 2nd of February, when we were trading up at 4,188, the market has declined from those highs. At one point earlier on today, we were down 9.10%. And this was because the market was expecting higher rates, higher than expected rates. And of course, we've had that 9.10% crash, where now we're trading at a much lower level, a discounted price area here. And all of a sudden, the market is now pricing in rate cuts. So how can we be trading but roughly 8% lower than the February highs when now the market is pricing in rate cuts? That, to me, mathematically doesn't make sense. And I feel like we are due a rebound. Now, as much of my research has predicted, and I've stated this over in my Signal group when I post the research every single day, my cycles have been telling me that the 15th of March, which is the 10th trading session in March, is indicating that we are going to see a cyclical bottom here, a cycle bottom. And with that being the case, I am anticipating for a very aggressive rally going into the end of the month. And now that's starting to make sense because we have interest rates which are plunging, and we also have stock markets which are plunging along with it. But we also have the VIX above 30, which is very bullish, and we have the AAII bull bear sentiment figure now coming in at well below 20%, which historically that will tell you that that's actually a good buying signal. So I think that the stars are starting to align here for a nice bullish rally as we go into the end of March. Of course, there's been lots of volatility. There may still be volatility to come because tomorrow we have the CPI inflation reading. But as I just mentioned, the stars are starting to align for a very strong, aggressive rally towards the upside. And I myself and my Signal team are currently poised to benefit if we were to get that rally. So with that being the case, guys, if you would like to copy my current open Signal that I have open in the S&P 500, then please do not hesitate to scan this QR code on your screen. I charge a very small fee of $29 to join my Signal team. So you do not want to miss this current buy signal that we have open in the S&P 500.